Equity investors in the Nigerian Exchange gained 21.7 billion naira on Thursday as the market appreciated further amidst earnings releases by companies. Consequently, the all-share index increased 11 basis points to 39,400.46 points as a month-to-date return expanded to 2.5%. Meanwhile, Thursday's gain lowered year-to-date losses sustained by the local bourse to 1.9% as stock market capitalization jumped to 20.574 trillion naira. The average yield on Nigeria's treasury bills slumped on Thursday on subdued inflation rate outlook, according to consensus analyst projections. Now, the National Bureau of Statistics will be releasing inflation numbers for July 2021 next week, with the expectation of a further slowdown in consumers' price index. Outside of Nigeria, we'll also look at activities in the bond market. The bond market across Africa has become a rich source of funds for many nations, and this is being milked regularly by the various central banks to ensure continued liquidity. And now their thirst has reignited the desire for foreign bonds, with European listings eagerly being sought after. Benin, Ivory Coast, and Egypt have led the pack here, with Nigeria, Kenya, and others following closely behind. Today, we're looking at reviewing the equity and fixed markets across the continent. I'm Tolulope Adeleru Balogun. Welcome. This is Business Edge. Joining me is the Managing Director of Trust Bank Capital Management, Aziz Lawal. Aziz, welcome back to Business Edge. Thank you once again for joining me.
Yeah, good morning. Thank you for having me. Good morning.
All right, so let's start with some of the activities that happened on the Nigerian Exchange. Now, at the close of transactions on Wednesday, the all-share index rose by 271.84 points, closing around 39,000. Hello, Aziz, can you hear me?
I can hear you clearly. I can hear you.
Okay, great. So market capitalization also increased by about 142 billion naira from 20.411 trillion to 20.553 trillion naira as well. So this was some bullish activity we saw. What led to this?
Yeah, like we rightly noted at the beginning, impressive is the positive supplement from market. So that was the activity. Companies are still coming to the market. Like we said, on Wednesday the market is and again the market is point that positive. Another 0.1 particularly the things of on your offshore Zema Bank and Dangote Cement. I mean, we'll continue to see that to continue. Yeah, thank you.
All right, so during the midweek trading, we also saw Pharma Deco lead the gainers. It appreciated by about 9.17% to close at 1 naira 19 kobo. Nemeth went up by 8.61%, ending the day at 1 naira 64 kobo. Did we also see a similar increase in other companies in the pharmaceutical medical services sector as well?
Yeah, we should not be surprised to see that because typically short COVID-19 infection and support the performance of our this is a global trend, especially as people were in black premium business. And if you recall last year, breast care, data, they all added over 50% last year. And many of the investments, including one of the best performance at the exchange last year, which is over 300%. So what you see now is speculators coming in with the recent surge in COVID-19 infections and death. So you'd expect that also product market into other stocks. But I want to mention that all many came into the market to announce their intention of the issue. That will also support the start of the company going forward. But presently, what we see is more speculation rising from COVID-19 infection.
Interesting. We saw that equities also jumped about 0.69% on Wednesday, and that looked to set the course for a positive return for this week. We also saw investors being very exuberant for bank stocks, and that helped sustain an upward trend that began at the end of the last trading session. Now, that helped par the bourse's year-to-date yield down to 2.04%. What predictions do you have for us today in terms of how the market might close out? And then, of course, what we could expect possibly to happen into the next week?
Yeah, we expect the trend to be sustained today marginally. And today can turn out to be a mixed session anyway. So the decline will not be a surprise. Because yesterday, in the markets, we saw just 8 gainers against 24 losers, and the market marginally inched up by 0.11%. But then the bullish momentum is still there. You still see some positives, particularly around some high cap or banking stock. So the trend may be sustained today, but again, don't be surprised if you see a marginal decline as investors whip funds together for upcoming bond auction next week. So we expect more of a mixed sentiment to close trade today or to continue into next week.
Okay, so expectations of seeing some of these trends continue into the next week. So Aziz, hold on. We're going to go for a break now, but when we come back, we'll expand the conversation to look at the performance of some African countries who have taken their bonds to the international markets. You're watching Business Edge right here on News Central. We'll be right back. Still with me is Aziz Lawal, the Managing Director of Trust Bank Capital Management. So Aziz, as I said, we'll expand this conversation now to look at the performance of some African countries that took their bonds to the international market. Now, some of the countries that issued papers in the first quarter of 2021 include Benin, which became the first African country to issue a euro-denominated euro bond. Now, the dual tranche paper was issued in February 2021 and raised an equivalent total of $1.2 billion. So do you think this was a successful outing for the Benin Republic? Should they have gotten more, or were we expecting less returns?
Yeah, the outing for Benin Republic, it's expected. For me, at that level, it's a successful outing, like some other African countries. It's a successful outing, actually.
So it's successful as in terms of where they got the $1.2 billion equivalent is enough, or could they have done better?
Considering their current economic status outside of their GDP and what they intended to raise, $1.2 billion is actually a very successful outing for Benin Republic.
All right, so we'll be watching to see how that plays out. So we also had the Ivory Coast that also went into the market by reopening a dual tranche euro bond that raised about $850 million. Now, the paper had 11 and 27-year instruments with 4.8% and 6.8% coupon rates, respectively. The issue also received bids worth $2.9 billion, translating to a 3.4 times subscription rate. The bond was earmarked for the financing of the country's budget. So tell us, what do you think played out here to get such a high oversubscription rate? Do you think the tenure also influenced the success of the offering from the Ivory Coast?
I think that question, sorry.
The tenure of the bonds that were on offer also possibly influenced the success of what was on offer.
Yes, the tenor is a factor, but majorly is the yield that really attracts investors. Is the yield. So, when pricing these bonds, you consider the tenor and a couple of other factors: the rating of the country, the economic situation of the country, and the potentials for the company to pay back. And so, if you combine that together along with the juicy yield, it's a good outcome, and that's why you see the appetite of investors for those euro bonds.
And we'll get into that before we wrap up, because this idea that African bonds are now a bit more appealing to the international market. But let me quickly ask you this. This idea of going to the bond markets to finance a budget, it's quite an interesting one. And we've seen many people debate the feasibility and sustainability of it. But what do you think, as an aside? Ivory Coast went to this market in terms of helping them to finance their country's budget. What thoughts do you have about this?
I mean, that's the trend. Typically, you see these African countries go to the bond market to sustain, to majorly fund their budget. It's not healthy, really. It's not healthy. I mean, currently, look at, for example, the debt to GDP ratio of Ghana is about 78%. For Egypt, it's about 90% thereabouts. And I mean, Kenya is doing about 66%. Meanwhile, for developing countries, at those levels, they should be doing a debt to GDP ratio of about 60%. So it's not healthy. It's not a healthy trend at all. It's not a healthy trend for Africa at all. And there are serious signs of unsustainability. And even before COVID, there was a report in the first quarter of last year, and it marked some so-called the African economies as unsustainable in the line of debt raising, and Ghana was one of them. So they are not sustainable and they are not healthy, really. But I mean, let's see.
They might tell you that right now they're working with the options that are available to them. So you did mention Egypt, and we saw the country take advantage of the recent rally in African sovereign notes. Now, they were able to raise $3.75 billion of bonds in 5, 10, and 40-year notes with some interesting yields. The yields came to 3.875%, 5.875%, and 7.5% respectively. Now, this also seems to be following a new trend of offering longer tenures. Do you think that these tenures also increase the risk that are associated with these investments, with what is going on in the bond market as it could be?
I mean, typically, the higher the tenor, as far as long-term debt instruments are concerned, the higher the tenor is usually the higher the risk for willing investors. So typically, compensation is usually higher depending on how long the tenor is. But the good thing is that for these tenors, they are actually high enough for countries that are very deliberate to use these bonds constructively. Like for a 40-year tenor at 7.5% is actually not bad. But what we have seen in the past is that you've seen African countries raise bonds to fund projects that eventually fail. We've seen such projects. There was a project in Ethiopia that failed, and the money that was used to fund it was raised from Eurobond. Again, the point is, the long tenor bond at those prices, they are not bad. But the issue is sustainability and the use of the proceeds from the bond.
And that sounds like a conversation we need to take up on another day, especially as we also look at the fact that you said earlier that seeing African countries continually trying to finance their budgets by going to the international bond market is also something we should be worried about. But let me ask you this. What kind of events could negatively affect the yield of such long tenure bonds? We're seeing longer tenure bonds being offered, but we also need to be aware of what could negatively affect the yields on these bonds. What do you think those events could be? Aside from something like a COVID-19 that we've seen.
What factors can make you go up, you meant?
I said, what kind of factors can affect the yield on longer tenure bonds, negatively affect those yields?
Yeah, when you say negatively affect yield, I mean, typically, for a country that has a poorer economy or a lower credit rating, for example, you typically will go up. So, I mean, the thing is that, I mean, generally, the yield for African countries are high and they are sweet enough. That's why these investors are running after them. And that's the main reason you continue to see hidden appetite for African bonds. Considering the fact that currencies in which these bonds are denominated, you do not have many opportunities to get high yields on them. For example, a 10-year Ghana Euro bond presently is trading at around 6 to 7%. Not many options can give such returns on a dollar investment. Not many places you can take $1 to and you earn as high. There's some European countries or even US where you get less than 1%. So African economies provide a very good opportunity for investors, including foreign investors, to bring in their foreign currencies and earn high yields. To answer your question conclusively, the economy in Africa, those economies are weak. The ratings are not so solid. As a result, they have higher yields compared to maybe their contemporaries in other developing countries. So those are factors that can make yields go up. Economy, rating, the possibility of the economy improving in future. Those are factors that generally affect yield. Whether negative or positive, because if your yield is going up, I mean, it may be perceived as negative, but then it's an opportunity for you to attract more funds over subscription like you see in many African countries. So it really depends on what investors are looking for.
And we also saw that oversubscription you just mentioned now in April with Ghana, and they raised about $3 billion for their Euro bonds. So in terms of what we're looking at, the Ivory Coast, Ghana, Benin Republic also being oversubscribed when they went to the markets as well, it seems that this is highlighting the demand that we're seeing for premium investors to hold some riskier assets. And you did mention why African bonds might appeal to them or might appear to be more risky. But in terms of the appeal, I really want to know, what's the appeal of African sovereign debt, African bonds that are coming onto the market for an investor or for investors? What do you think it is?
Like I noted earlier, the yield really is that simple. They are high and sweet enough. They are high and sweet enough. Like you said, for Egypt, for example, that did 40 years, 7.5%, 5 years, 3.87%. In US, for example, you will struggle to earn 1% on $1. You will struggle. So, I mean, African economies provide the opportunity for you to invest in dollars or euros at higher yields. So the increasing appetite we are seeing in African bonds generally, considering the fact that the currencies in which these bonds are denominated do not have many opportunities for such yields. So it's the yield. It's the yield, and not many. Again, I'll keep saying, not many opportunities for these currencies to get such yield.
Okay.
Not many.
All right, Aziz Lawal, thank you so much for joining me. We've talked a thing or two about some of these trends, and there are trends that we're going to definitely keep our eyes on. As we know, more African markets are going to be making these offerings, looking to finance their budgets, finance infrastructural projects as well. But a very interesting point you also made on those projects. Some of these projects never eventually saw the light of day or absolutely failed, and yet we're still back in that same situation. So we'll be touching base with you as we see the developments on the bond markets and in the equities market as well. Aziz, thank you so much.
Yeah, thank you very much for having me.
All right, have a good one. All right, so we'll be wrapping things up. We have 4 things left to do, and that's NC4 to watch. That comes your way right now. NC4 to watch is what we are doing right now before we wrap up Business Edge for this week. And we start with South Africa, where the average value of economic transactions in South Africa has registered another decline for July. This marks the second consecutive monthly decrease, according to the BankServe Africa Economic Transactions Index. The index represents an overview of economic trends over a range of sectors, making use of captured economic transactions. Zimbabwe intends to boost her exports. Now, the southern African nation says exports of agriculture and mineral commodities would be the backbone of its policy framework next year as the country seeks to grow exports from the secondary sector. This is expected to help the country mobilize investments and create employment. British American Tobacco Kenya is eyeing new export markets, seeking to compensate for a drop in Kenyan sales. The firm is targeting Djibouti, Madagascar, and South Sudan with cut rag tobacco, cigarettes, and tobacco-free oral nicotine pouches. Kenyan market sales dropped 13.8% to 11.6 billion Kenyan shillings last year on reduced consumption of cigarettes. Now, this came in the wake of regulatory curbs and rising prices following additional taxes. And finally, Ghana is to partner with a German technology company to pilot its proposed electronic currency from September. In a release, the Bank of Ghana disclosed that it had signed an agreement with Gesek plus Devrient, a German firm, to start the central bank digital currency project as a precursor for the issuance of a digital form of the national currency, the cedi. And that's it on Business Edge. Thank you for joining us throughout the week as we took a look at business, financial, and economic stories happening and developing right here on the continent. Subscribe to our YouTube channel and make sure you don't ever miss an episode of the show. Follow us, of course, on all of our social media platforms and download our mobile app on your Play Store and App Store to take us with you wherever you go. I'm Tolulokwe Adileri Balogun. I'll see you 11 a.m. West African time on Monday as we again get into the economics of Africa.